Joining us now to unpack the rate cut and what it means for the economy, markets, and the business community is Angelo Taningco, the Research Head and Chief Economist at Security Bank. He'll give us insights on the BSP's shift in tone, how quickly consumers and businesses might feel the impact through lower loan costs, and what it means for growth, investor sentiment, and the outlook for the peso and the stock market, especially as global trade uncertainty continues to rattle emerging economies like the Philippines. Hello, Angelo. Good morning.
Good morning, Mikey.
So as expected, the BSP cut interest rates by 25 basis points. How important was it for them to do this at this junction? And why 25 and not 50?
I think it's an important step for the central bank to resume its monetary easing cycle this year after cutting by 75 basis points last year. So we believe this is very appropriate given this juncture, as the external headwinds have increased in light of the global trade war, as well as domestic inflation now subdued thanks to a lowering of rice prices, as well as a tempering of the oil prices. And as such, the Philippine inflation is well within the target range of the central bank, depicting a manageable inflation environment, and therefore this would warrant the central bank to initiate again a rate cut in order for the policy rate to move from a restrictive level towards a neutral level.
Mm-hmm. When we talk about the factors that push the BSP's monetary board to do this, they had the latitude to do it, and they had the reason to do it. When we talk about the latitude, interest rates are well within target. The peso dollar, the forex rate, were far from 59, and with global growth risks rising because of the trade uncertainty, we also had the reason and the need to boost growth. Even though it's an election year, there's so many external factors. Can you tell us, of these three, what was the biggest consideration for the BSP at this meeting, in your view?
Based on their policy statement, they have stated that they have now turned more accommodative in their monetary policy stance, which tells us that rate cuts are now warranted because of the need to support domestic economic growth, while inflation is manageable.
Mm-hmm. Looking ahead, how many rate cuts are you penciling in for 2025?
Now we are looking at a total of 3 rate cuts at 25 basis points each, for a total of 75 basis points for this year. So after yesterday's 25 basis point cut, we believe there will be 2 more rate cuts at 25 basis points each. And it could happen the second on June. And we think another will likely take place in the third quarter of the year.
Mm-hmm. For the average Filipino, Angelo, when will these rates, lower rates, start being reflected in monthly payments for whether it's a household loan or an entrepreneur seeking a loan? When will we start feeling the effects of the BSP's latest rate cut?
Taking into account last year's rate cuts, we are already feeling the lower rates environment at the start of 2025. And given the resumption of rate cuts initiated yesterday, we think that there could be further reduction on rates as early as this second quarter, and that could continue throughout the remainder of the year, given our expectation of more rate cuts down the road.
Mm-hmm. Just before we go, Angelo, can you give us a recap of your views on inflation, on GDP, and even the outlook for the PSE index? Last December, you pegged the PSE index at 7,400. I think that was your target for the year end, but things have changed so much since then. How are you recalibrating your forecasts?
Indeed, at the start of 2025, we have been upbeat on the Philippine GDP growth, our forecast this year at 6.1%. And our inflation forecast, we have recently revised lower at 2.7%, coming from our initial projection of 3.2%. Our PSEI target for year-end at 7.4, which we have penciled in last December, is currently being reassessed given the market sentiment now being dampened by the escalation of the global trade war, which everybody thought was deeper than expected. So with this, we are going to revise, likely lower, our PSEI target for year-end to take into account these recent developments, especially coming from the external front.
Yeah, and you'll be sitting down to do this after the Holy Week, so we'll check back with you after then. Thank you for your time, Angelo.
Thank you.